All right, everyone. So we had a few questions so we talk about infra, we talk about very technical stuff on the first panel, but now we have the chance to have the other side of the coin. We have the people that are investing in DePIN at the moment. We talk about AI, but we're going to slightly shift to DePIN. But the two are very interrelated recently, especially because of compute and how compute is powering decentralized AI at the moment. So guys, after the picture, I'm going to have you introduce yourself briefly, introduce your company, and then we kickstart the question. Diego, you want to start?
Sure. My name is Diego. I've have a Twitter account called Solana Legend. A lot of people know me from that. But I've been in the Solana ecosystem for many years. Helped start Monkey DAO back in the day, and early stage investing through my fund, Frictionless Capital. We are very pure play focused on the high throughput blockchains like Solana and the 0 to 1 applications like DePIN that are uniquely enabled by all the performance, right? And I think DePIN represents one of the most interesting frontiers in terms of, if you think about AI as an intelligence boom, crypto is kind of a coordination boom, right? Coordinating capital, humans, devices, and digital commodities around the world. So we're very excited about the category, and yeah, excited to chat more about it today.
Thanks.
Alex. Hey guys, my name's Alex Golding. I'm a venture capitalist here at Delphi Digital. Delphi was founded about 6.5 years ago by a group of founders who wanted to tame the wild, wild west of crypto. And they started with a research firm. And that research arm has been declared by Vitalik and Anatoly and many others as the best institutional research firm in the space. That spawned a consulting arm where we've done token econ creation, risk modeling, governance work, graphic design for all the best, right? Aave, Compound, Balancer, Axie, Synthetics, Optimism, Arbitrum, Sui, etc. We have a labs team, and two of my colleagues are here. Our labs team is very focused on AI. We've done an AI accelerator with Near, and we just launched a new AI accelerator, multi-chain, with Solana Foundation, ETH Foundation, and Base. On the investments team where I sit, we have about 150 active portfolio companies. We typically do pre-seed and seed in 5 core categories of AI, DePIN, gaming, infrastructure, and DeFi. Most of my investments that I've done for Delphi have been in DePIN, infrastructure, or DeFi. We write checks in the $500,000 to $2 million range, and you can cold call us anytime and pitch us. Thank you.
Thanks, Alex.
Hey everyone, my name is Connor. I'm the founder of Proof of Coverage, which is a crypto-native media firm. So unlike everyone else up here, I'm not an investor by trade, but I've been in the DePIN sector since the very early days back in 2020 with Helium. So I've seen a lot of what has worked and what hasn't. And circling back to Proof of Coverage, we offer media services to crypto founders and crypto funds. So everything from podcast launches and management to in-person events and shooting, and then also kind of like token launch videos and any other media services that those clients would need. So excited to talk DePIN and AI today.
Thanks. Amanda?
Hi everyone, I'm Amanda. I'm on the investment team at Collab+Currency. We're an early stage crypto fund focused on pre-seed and seed. Our thesis is focused on consumer adoption, and DePIN and AI have been core categories for us within that. Similarly, you can reach out. I'm on Twitter at Amanda0x, or come up to me after.
Thank you. So I'm going to kickstart with the first question for you, Alex, on Delphi. First question is, why is DePIN such a compelling investment thesis? What macro kind of support that at Delphi?
Could you just repeat it? Why is DePIN what?
Why is DePIN so exciting for you in terms of investment thesis? Like, why are you investing in DePIN?
For sure. So DePIN's super exciting for a few reasons. One is, as we're all familiar, tokens provided this great bootstrapping mechanism, and we feel that DePIN really embodies that, right? DePIN is not really most of them are not crypto native. It's a real business, or like an off-chain business with some type of crypto layer on top. And so that gets me excited because as we enter this new era, this new framework for crypto where you're going to have this barbell of meme coins on the left and fundamentals on the right, DePIN fits solidly in that kind of sector. And I think that there are certain industries, in certain verticals, certain use cases, where the tokens provide the necessary activation energy to take a business that would have done okay up to the next level. And so we've made investments in energy, in AI and AI infrastructure, as well as in like telecom infrastructure quite recently. And so I'm happy to talk about them later, but whatever my kind of panelists, they want to chime in.
Do you guys want to add something? What is exciting you?
Someone?
And DePIN.
Yeah, I think DePIN creates a lot of opportunities in terms of collapsing a central decision maker like a corporation. They go out, raise a bond, get the licenses, and then build it, right? But in the 21st century, there's a lot more novel ways of bootstrapping liquidity and enabling new capital formation and passing ownership to the participants. So it's like, how do we take on AT&T today? It's hard, right? They can raise a $10 billion bonds, right? And they just start building towers. Yeah. But if you bootstrap it and you give ownership to the people that are adding value to the network, as it turns out, that's a very powerful equalizing force. And specifically, I think what excites us is the demand for these digital commodities like compute, bandwidth, storage has been up and to the right for the past 25 years, like growing at a compound annual growth rate of like 30 to 50% in some cases, right? So the demand side is so clear for these digital commodities. And if you can incentivize new supply to come on, and the demand side is already clear and sort of solved, then you have a great business.
For us, it was the consumer angle that drew us in. So just in terms of scaling the supply, anyone around the world from like people either recording with dash cams or Chrome extensions on their browser or contributing their compute from a MacBook, it sort of democratizes who can contribute to these businesses, and we were excited from that angle.
Happy to chime in. I think it's still very early, but to see the change in behavior of participants when, say, there's a lot of different contributors that are building a network together. Like, Teleport sadly went out of business, but I thought it was a really interesting idea around building like a decentralized Uber where there's kind of just a matching engine instead of Uber, the centralized corporation in the middle. And one idea that they pioneered to put out there was this idea of permissionless marketing. So basically, if you're a Teleport driver, and you have a share of tokens that represent kind of like a stake in this network or company, you'd be much more likely to basically like market the fact that you drive on Teleport, and you'd want other people to adopt and kind of use maybe that network versus like an Uber or a Lyft. And I don't think you would see that with like Uber or Lyft drivers today. So looking at how token incentives can change behaviors of participants in these markets, because now contributors basically have a stake in these networks, is going to be really interesting.
Thanks. I think there was this moment on like Web3. We had this creator economy, right, where people could finally get something out of the content they were creating, and I feel like DePIN, with what you say, kind of allow that in the real world, right? Finally, you could create something that is physical and kind of own a part of it with the token. How different it is to invest in a DePIN project compared to a project that would have done that in a traditional way, right? That would do this pure infrastructure. Where do you look, and what is fundamentally different?
So I used to work in investment banking for infrastructure projects, and it was a very different game. It was all a licensing game, getting the shovel-ready permits to be able to prove up the project. Equity goes in first, de-risks it, and then you try to put as much debt as you can on it. But to be honest, these were physical infrastructure projects, right? Like tollways and airports and bridges and water systems. I think the new frontier is all digital, right? So whether it's a content delivery network, federated compute platform, you're doing bandwidth sharing and distribution through something like Dawn. I think there's a lot of new business models that collapse the cost for the consumer by 80 to 90%. And whenever there's that wedge of like real economic value creation, like your internet bill is going from $100 a month to $10 a month, that's when you know you have a good business.
Yeah, absolutely. I'd like to second that. And kind of what Diego was saying earlier about being able to shift the burden of cost from the original infrastructure provider to like the end on the edge, and so the edge nodes kind of become, we'll call you guys people nodes, kind of become you become the infrastructure provider, but you're a mini one. And because we have these advances in technology, we can string these together in a way that that unlocks and unleashes kind of local capacity in a way that just really wasn't possible before. And I think that's super cool. Also, when it comes to DePIN, I think it's super important to note that there's going to be like meme coins. There's going to be 1 million DePIN projects, and I think that the good ones will naturally rise to the top out of their own kind of out of the team's ability to execute, and that's going to drive value to the token. So we're seeing a bunch of just random things. I'm getting a lot of pitches for a bunch of random projects with the DePIN token at absurd valuations, and it makes it easy for me to figure out who to invest into, because I can look at these things and I can say, look, just because you have a token doesn't necessarily mean that a market that was $100 million before is all of a sudden going to like expand in size to a multi-billion-dollar market. And that literally happened to me the other day. Someone was pitching me for a company, and he was trying to create like a new version, a tokenized version of a certain thing. I won't say specifics, but that market was literally it's a monopoly market right now with $100 million of total like revenue happening, but the valuation he was coming to me with was $60 million for this pre-seed company, and I'm like, this doesn't quite make sense. Like, I don't think that adding a token is going to enable me to get like a VC type return, that J-stick return, just because you're DePIN. And so, if anything, it's this return to fundamentals. You have to have common sense thinking. You can't just hope that like, it's crypto, hence it's going to be a decacorn. And so, yeah, I think that's super important to keep in mind when you're investing in DePIN. You guys?
For sure. Yeah, I think it's important to, not that we need more segmentation or like classification within DePIN, but on the supply and demand side, you can either kind of be enterprise facing or retail facing. And this is probably more up Amanda's alley, but like the DePINs that are looking to incentivize supply side contributors that are just like average everyday people, like Hive Mapper putting dash cams in cars, or like the Helium mobile app where you can share your location data and then Helium will know kind of what the signal strength of various networks is in various places. If you can tap into consumer behaviors that are already happening in a very kind of like low friction way, that can create very, very interesting business outcomes, because now there's like a small incentive to do something, but you were already kind of doing it before. Like, it just doesn't make sense for the Google Maps Street View to be built by these really expensive cars that drive around once every 3 years when everyone is driving around all the time anyways. So that's what gets me excited about kind of consumer-facing DePINs, at least on the supply side. There's a lot of other, I think, caveats on demand side in terms of like, are you trying to run an enterprise sales process, in which case I think DePIN has a lot of work to do, or are you trying to sell to consumers like Helium Mobile again? But that's one way I think about DePINs is retail versus enterprise facing. Yeah.
Building on what Connor was saying, I think trying to understand both the supply and demand and what is enhanced by being decentralized with the token is sort of what I'm looking at. And I think often I'll get pitches that are like, okay, we can get this big supply of all these consumers, which is awesome, but then they're not less clear on like who wants whatever is being built or the data that's being created. And so I think that will be the next kind of push, is more revenue on chain, more of a push towards fundamentals.
I'd just like to just double click on something Connor was saying, right? So these, just so you guys know, like the Google Street Map cars are like $258,000, I think, a car, something like that, versus a $200 Hive Mapper cam. So you can see like 1,000x, more than 1,000x, like a 10,000x like decrease just unlocked by this like DePIN model, and that's super cool. So yeah. Just wanted to highlight that.
And so you guys are seeing a lot of projects coming to you and a lot of different tokenomics, I guess. And I would like to get your take on that to start to be a bit more technical. What do you see working? Because you say it's an infra project plus a token layer on top of that, which is the enabler of a lot of things. So what do you see working in terms of tokenomics? What works, what doesn't work?
Yeah, it's kind of what I said earlier. Like the best tokenomics are simple. If you can't explain it in 30 seconds or less, then it's kind of a Ponzi, to be honest. Like, I'm not gonna lie. There's a lot of people that are trying to like engineer and hypothecate and rehypothecate stuff in a circle and then somehow like make it make sense. But the best businesses are very simple. They have a wedge in terms of cost. There has to be value creation somewhere. People have to pay real money for the good or the service. They have to demand it. And if you have that, then as it turns out, it's pretty easy to create tokenomics, whether it's a buy and burn or whatever, even passing through revenue. I think now with the regime change in the United States, there's going to be a lot more clarity on what can be done and what can. And it could honestly usher in a new era of different types of value capture and distribution mechanisms on chain.
Yeah, I want to touch on two quick bullets, right? First is faucets and sinks. So any tokenomic system needs a faucet, right? So you need tokens to come in, and then sinks, which means like you slow either tokens go out or you slow the velocity of said token through the system. And by slowing the velocity of said token, that kind of acts as a supply constraint. And so you need that. There's a certain solar energy project that pitched me last year, and they were all faucet, no sink, right? What happens if supply increases ad infinitum? The per value the value per unit of token decreases. So that was something we could invest into. Two, I want to talk about payments. As DePIN projects gain or become more successful, you're seeing more acceptance on behalf of like VCs and investors, and also like the general crypto investor sphere, we'll call it, for enterprise use cases of DePIN, where enterprises, so non-Web3 companies, can pay in a fiat that is pegged, like a fiat pegged price for said good or service, and then it gets converted tokens on the back end, or something happens on the back end. If you had pitched us this 4 or 5 years ago, we probably would have told you it's crazy, this won't ever work, blah, 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 like you're putting an artificial ceiling on the token. But we're seeing that like people are building really good businesses on this. Take, for example, IONET, which we invested into. IONET's maybe a year and a quarter old. They're on a $35 million a year run rate. Like, that's unheard of, right? If you could tell me that I could roll the dice and in 500 days, in like 450 days, something like that, be doing $35 million a year in contracted revenue, I'd say sign me up. So, and IONET's one of these examples of the businesses that are doing these, these enterprise payment flows that I've referred to earlier.
Yeah, I think faucets and sinks is a great way to look at it. So faucets are basically ways that token incentives get distributed, especially in DePIN systems, and you need that to motivate people to help you build a network or to buy hardware or to do things in the real world. I think there's been a lot of different takes on token incentives. I've seen projects be much more thoughtful this cycle rather than last cycle in terms of not wanting to distribute too many tokens too early. I think that's hamstrung a lot of projects in the past. And maybe one example of that is, like, again, HiveMapper, building a map of the world kind of visually. They unlock token incentives based on how much of the map is covered, so they don't basically like have one pool that's the same size every day that gets distributed, even if like only one part of the world's being mapped. It's like kind of unlocked geographically over time. So that's a way to slow the token incentive side of things. And then on the token sync side of things, in terms of, I think buy and burn has definitely been the most commonly adopted, successful way to accrue value from a network back to its token. And I think, we saw GeoNet's been crushing it lately this cycle in terms of they've just had their heads down building. They've built one of the largest RTK networks, which basically makes GPS more accurate in the world. They're almost on par with like their largest Web 2 competitors. They built this in a Web 3 way, and they've just consistently gotten revenue and accrued it to the token on chain. And they just raised a big round from Multicoin and a few others. So super excited to see them just continue to have their heads down and make progress and get DePIN closer to balancing out this like token incentive and token value accrual on the demand side, which is important.
Yeah, I agree with everything that's been said so far. I think what we've seen more of is like a supply overhang, where maybe you're rewarding these contributors who maybe aren't providing that much value to the network. And so that can result in like a sell-off if that's not on the other side balanced out by demand and actual revenue and value creation. So I think the shift is starting to shift though, as we're seeing projects like establish their businesses more in terms of the demand side.
Thank you. And so you mentioned type of tokenomics right here. We mentioned like buyback and burn. We mentioned eventually burn and meet. I don't know if someone's thought about it. What are the, I'm sorry to bring this question because I hate it usually, but in terms of legal view, like some people are talking about buyback and burn being like risky to implement and etc. What do you advise to the project that are in your portfolio now? What do you see being very safe in terms of tokenomics? What do you see not being safe? What's your view?
Yeah, I can say something as the non-investor. I think there's going to be a premium on truly decentralized DePINs over the next few years as we get more clear regulation from the Trump administration. I think that they want to incentivize and focus the crypto community on real projects that are, providing real world value. Hopefully there's less meme coin launches from presidents, but basically once we get that regulation, and if it's kind of in the way that I'm thinking in terms of looking to incentivize real projects, versus meme coins or anything else, like the DePINs that are decentralized basically won't have to worry about any kind of securities regulations. Even in like the prior administration, when that administration was much less crypto friendly, if you had been truly decentralized, like you would have probably been fine, not legal advice. So yeah, I think the regulation that's coming will be good for the space and will also push DePINs towards being more decentralized. And I think they probably needed a nudge to do that anyways. There's this constant balance between when you're starting a project, if you're fully decentralized from day one, nothing's going to get done. So I think this is like a thing that happens over time. But I'm definitely bullish on increasing decentralization in DePINs, and I think it will be good for the sector and the space as a whole.
Yeah, I just want to say that, like, I think there are certain industries where the Silicon Valley model of startups and entrepreneurship have pushed back against, like, kind of the status quo. And if a DePIN project or a crypto project wants to push back into status quo, as long as it's not, like, doing anything fraudulent, not hurting anyone, cool, I'll support you, right? Especially if you can prove that you as the founder and the team can, operate at a high level of excellence. I will support you. We will figure out a way to make it work. One thing to note is that when we had a very aggressive and not only aggressive but antagonistic government regime here in the U.S. and elsewhere, the projects that executed at a high level and made a lot and were able to like generate a lot of value for people, they were able to fill up their war chest to fight back. Right, and so it ended up being more a cost of business, right, the cost of lawsuits, et cetera, than anything else. Because it's not like people, as long as you weren't committing fraud, you weren't going to jail. It wasn't a Department of Justice thing. It was an SEC thing, which is civil, and that's a very important distinction. And I do know that for the people who weren't successful, unfortunately, many of them were financially ruined, and so that was. That's crazy calculus, I think, to have to make our entrepreneurs here in the land of entrepreneurship, the country that has generated the most unicorns in the history of the world, to have to force some of our best and brightest entrepreneurs to weigh that, take those factors into consideration before launching their protocol. And so I'm very happy that we're in this new regime. I'm very happy that people don't have to worry about whether or not they're going to be financially ruined. And I just want to encourage everyone to truly realize that we are in this new paradigm. And if you've got an idea for a startup, and especially a DePIN startup, go out there. The world is waiting for you. The world is your oyster. You've got people up here who will fund you, people in the room who will support you. Go do it.
I'm ready to run through a brick wall right now.
Yeah.
But I'm not a lawyer, but honestly, it's kind of a gray area. As long as you're not doing thinly veiled token sales to retail individuals, that's obviously a no-go. But generally, if someone's performing a lot of helpful activities or contributions to the network, it's fine, right? People are making 6 figures a month from TikTok shops, affiliate programs. that's not security, right? People
Yeah.
are just like making money.
Exactly. Yeah, exactly. All right, thank you for answering that. The coolest DePIN project, actually, according to each other, like the top 3. You can repeat it some time. Yeah.
All right, I'm going to be edgy. We're incubating a distributed compute platform founded by some former members of the OpenAI team that we're really excited about. So,
Oh, nice.
so keep your eyes open for that one.
So yeah, we're super excited. We're backers of IONET, like I mentioned, so super excited for IONET and everything they're doing. That's what's up. Very excited. There's an energy DePIN project I can't mention yet, but soon. And then thirdly, this hasn't yet hit the airwaves, but I'll break it. We invest into 00, which is, they're unlocking private fiber lines. And this is going to be part of Solana's and anyone else's kind of roadmap, but they're going to be able to get Solana to be able to literally transact faster than the current speed of light, quote unquote, right? Fiber optic cable. So if you've got private fiber lines and you're the only ones in there, you can operate faster. So this is how Solana is going to outcompete some of these less decentralized options. So very excited about that.
Ooh, that's crazy.
Yeah, one DePIN I like a lot that's pre-TG is 3DOS. So the founder is one of the Web 2 3D printing industry veterans. He created an operating system that networks 3D printers together. So all of Google's campuses, for instance, can 3D print from one laptop, and you can print on multiple machines at the same time. And they use AI to monitor the prints, so if there's an error, it stops immediately versus kind of continuing to go over it. And so he's got a lot of Web 2 industry experience, and he wants to basically take this private closed network model that he's built in the Web 2 world and open it up to anyone. So he's trying to create the world's largest decentralized manufacturing network and allow anyone to add a 3D printer as supplier capacity and then print for other people around the world. And there's a lot of implications for cost savings in terms of shipping, logistics, transportation, customs, all of that stuff, because you can have products printed closer to the end consumer. So really interesting stuff.
So last year we invested in Pulse, actually with Delphi, and they're building an open health network. So selling a wearable similar to the Whoop device and letting users get rewarded for contributing their health data. So we're quite excited about kind of this intersection of data and DePIN, where people can get rewarded for the data that is being monetized in AI and in other use cases.
All right. Thank you so much. That's a wrap. Thank you.